In a volatile market, you're looking for some kind of stability. You want to look for companies that maintain or increase dividends even during economic downturns. So analyzing the financial health is going to first start with your earning stability. Ensure that companies has stable earnings that can support ongoing dividend payments. Analyze financial statements for revenue growth and profitability. Then double check the payout. You want to calculate the payout ratio, dividends paid divided by earnings. A lower payout ratio, generally below 60%, indicates that the company retains enough earnings for growth while paying dividends. You research industries and market positions are going to be other sectors of analysis. Some sectors like utilities, consumer staples, and a real estate investment trust, which I've gone deeply into, are known for higher dividend yields, and identifying companies within these sectors that have strong market positions is going to be very beneficial for you. Competitive advantages is going to be looking for the companies with a competitive edge, such as strong brand recognition like Tesla or Apple or T-Mobile, or unique product services such like Digitech or NASA or something like that. Use stocks screeners tools. These are going to be those fintech search engines that I told you guys about before. And you want to utilize stock screening tools available on financial websites. They have Yahoo Finance. I mean, Google's got one that's a lot better than Yahoo Finance. And then there's also Morningstar that you can also use to filter stocks based on dividends. If you were to take the time to tag stocks of interest in your Google platform, it will give you up-to-date real-time analysis of your stocks, of the stocks of interest, and show you when they're up and down, what the yields, payout ratios, and other financial metrics are. You can have this as an app on your cell phone. You can set these things up on your desktop. You can have it pop up in the background when you go into your search engine and start looking for stuff. All you really have to do is just customize your search engine. Reviewing analysis ratings and recommendations is going to be something that you really need to consider. The analyst ratings and census recommendations for potential stocks will inform you, actually, not just convince you, it'll inform you that stocks with a buy rating from multiple analysis may indicate a good investment opportunity. You want to monitor economic conditions, be aware of macroeconomic factors that can impact dividend paying stocks, such as interest rates and economic cycles. Higher interest rates can lead higher investors to favor bonds over high yield stocks. Because if you're looking at the deficit of the country, you might be able to buy into the deficit and get you a bunch of money when the country is down, but when the country is up, maybe not so much. You're looking at examples of high dividend stocks based on recent data. And some of these examples I'm going to be able to provide to you here today. And some of these are high dividend stocks worth considering. These are not the REITs that I was telling you about before, but you have Ultra Group MO that I told you about before that has dividend yields of 7.3% with annual dividends of $4.08 a share. You have Pfizer that I talked about before that's now at 6.8% with an annual dividend of $1.68 a share. Verizon that I've told you guys about, Verizon Communication, that has a dividend yield of 6.5% with an average dividend of $2.71 a share. Dow Incorporation that I've also mentioned before has 6.4% at a $2.80 a share dividend annually. You have Ford Motor Company that is 5.5%, which is combative of Dodge, and there is an annual dividend of 60 cents a share. And Conagra Brands, CAG, is going to be giving you a 5.2% yield with an average dividend of $1.40 a share annually. And Realty Income Corp, which is known for monthly dividends consistently increasing over time. And that's going to be something that you're really going to love. And when it comes to investing If you have this knowledge and power without clear understanding of different asset classes and how they work, it's easy to get caught off guard by market ups and market downs. As I've learned, it's essential to educate yourself on the various investment options available, including stocks, bonds, real estate, and more. By understanding the potential benefits and risks of each asset class, you can make informative decisions about your portfolio and avoid costly mistakes. When I first started investing, I was overwhelmed by the sheer number of options available. I felt like I needed a PhD in finance just to make sense of it all. But as I dug deeper, I realized that investing doesn't have to be complicated. By focusing on the core principles of investing, such as diversification, risk management, and long term thinking, I was able to create a portfolio that aligns with many financial goals and risks tolerances. Stocks, for example, offer potential for high returns over a long term, but they can be volatile in the short term. Bonds, on the other hand, provide a relatively stable source of income, but may not offer the same level of returns as stocks. Real estate investing can provide a hedge against inflation and diversify your portfolio, but it requires a significant amount of capital and expertise. By understanding the unique characteristics of each asset class, you can create a balanced portfolio that meets your investment goals and risks tolerance. As I explored the different asset classes, I realized that there's no one size fit all approach to investing. What works for one person may not work for another, and that's why it's essential to create a personalized investment strategy that aligns with your unique financial goals and risk tolerances. By doing so, you can create a portfolio that's tailored to your needs and helps you achieve financial success. So, what's the secret to building a dream investment portfolio in 2025? For me, it's all about creating a balanced portfolio that is diversified across different asset classes and risks levels. By allocating my investments wisely and managing risks, I can create a portfolio that is resilient to market ups and downs and align with my long term financial goals. By focusing on core principles of investing and staying disciplined, I can avoid costly mistakes and stay on track to achieve financial freedom.